Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be talking statement of financial position, but my focus is going to be on current assets. I have a practice question that I want to do with you. It is a pre-adjustment trial balance and extract from the books of CS Supplies on the 31st of December. All right. And then we have adjustments which you are seeing at the moment. And then we would want to do all these adjustments and see how they affect our current assets. Let us begin with the first one. It reads, the business donated stock with a cost price of 2,300 to a local old people's home. That means I need to come to my inventory note, that is note number 4. So I'm going to come and I need to record the inventory that was donated. But to begin with, I'll come here, then I'll say trading stock. So here I'm going to have my trading stock. Then I open bracket and I bring the amount from the trial balance, which is 33,000. Here is my 33,000. Then we are told that we donated stock of 2,300. So I come and say minus 2,300. Once stock is donated, we come and we subtract it in the business books as we have done here. Then we are told a physical stock count on the 31st of December, this is the last day of the financial year, revealed the following on hand. Trading stock 31,000. Whatever is on hand is what I then bring here, 31,000. But if you take your calculator, you say 33 minus 2,300 rather, 33 minus 2,300, you see that it will give you 30,700. I'm just going to write it here, 30.7. But here we are being told on hand it is 31,000. That simply means we now have a trading stock surplus. So you see I'll come in and say plus 300, such that 33 minus 2.3 plus 300 will give me the 31,000. So this 300 therefore becomes what we call trading stock surplus. And my trading stock surplus will be recorded in the statement of comprehensive income. All right, this becomes my trading stock surplus. I am also told that I have cleaning materials on hand, and my cleaning materials are 920. So I'll come here and then I'll say consumable stores on hand. My consumable stores on hand are 920. So these are the two adjustments that I have made from the physical stock count. The first one is the 31,000, which then leads me to getting trading stock surplus, and the consumable stores on hand, whatever is on hand, I bring it here. Then I'll add my 31,000 plus the 920. 31,000 plus the 920. Then I'll end up now with 31,920. Having completed adjustment 1 and 2, we now move on to adjustment number 3, and it reads, a debtor who owed 2,400 was declared insolvent. This simply means this debtor is no longer in a position to pay their account. Therefore, we will subtract that amount from our debtor's amounts. So I'll come here, then I'll say debtor's control. I'll come here, then I'll say debtor's control. And from the list of debtors, I have 41,440. Then I'll say the debtor whose account must be written off. Remember, once we declare insolvent, that means we're going to record this amount as a bad debt. So we come and we say minus 2,400. We are subtracting bad debts, minus 2.4. Adjustment number 4. An amount of 2,000 was received from J. Alex, a debtor who was previously written off in the previous year was credited to the debtors control account in error. So we have an amount of 2,000 which was received from J. Alex. J. Alex is a debtor who was previously written off. We're talking of the previous year in this case. This amount was credited to the debtors control account in error. Why are they saying this is an error? When an amount is written off as a bad debt in the previous year and we recover that amount, it affects two accounts. We will debit our bank account and we will credit what is known as bad debts recovered. That is what we do. However, when this amount was recovered, we then went on and we are told that we credited it to the debtors control. Remember that your debtors control is an asset account. Here's a debtors control. On the debit, it is a plus. On the credit, it is a minus. The moment we are told that we credited it to the debtors control, that simply means we came here and we said 2,000. Once we say 2,000 here, this is incorrect because this amount must not affect my debtors control. It must affect bank and bad debts recovered. That means I must remove that 2,000 that was incorrectly recorded on the credit side by putting it on the debit side. That is how I correct the amount that was incorrectly put on the credit. I correct it by putting it on the debit. So you see it's a plus 2,000. That means when I come here, I correct it by saying plus 2,000. That is how I would correct that error. I would therefore close my brackets because I do not see any more adjustments here. I'll say 41,440 minus 2,400 plus 2,000. That would then give me 41,040. 41,040. As you see over there, that is my 41,040. With me here, I have an extract from the pre-adjustment trial balance of CS Applies, and I have one adjustment which reads, a fixed deposit of 30,000 is set to mature in the next financial period. Now, what I'm going to do is, I am now going to come and do my note 6, which is cash and cash equivalents. The first thing that I will bring is my bank, as you can see here, 68,400, and you can see it is on the debit side. That means it is a favorable bank balance. So I'll come here and say bank 68,400, favorable bank balance. After bank, the next one becomes my cash float. So I'll come here and I'll say cash float. And my cash float is 8,000. That is my cash float, 8,000. The next one is petty cash. Petty cash. And my petty cash is 3,600. Then I will bring adjustment number 5. A fixed deposit of 30,000 is set to mature in the next financial period. So I'll come here, then I'll say fixed deposit. I'll record my fixed deposit maturing within 12 months. Maturing within 12 months. And that is for 30,000. I'll then add all these four amounts. If I say 68,400 plus 8,000 plus 3,600 plus 30,000, that will give me 110,000. 110,000. That becomes now the total for my note number 6. In this case, I can then go and complete my current assets. Remember, I have my inventory. So I'll bring here my inventory. Then I'll say inventories here. I'll say inventories. Remember, this is note 4. And I have 31,920. I bring my 31,920. The next one is my trade and other receivables. So I'll come here, I have my trade and other receivables. Trade and other receivables, which is note number 5. And I have 41,040. So I'll come here, 41,040. Then lastly, I have my cash and cash equivalents. So I'll come here and say cash and cash equivalents. Cash and cash equivalents. That is note 6. And I have 110,000. So I'll come here and then it becomes 110,000. When I then add everything, I'm adding 31,920 plus 41,040 and then 110,000. That will give me 182,660. 182,660. That becomes now my current assets. Dear learners, let's go for a net break and I'll see you shortly.